Hey guys, it's time to make a video on our entry models. So in this video, I will be sharing with you how you can take trades after mitigating into a fresh supply or demand zone. So if you're new to the channel, be sure to hit the subscribe button as this is the best place for your free education. So suppose you are in a downtrend and you're going to be looking to take sales from the fresh supply zones. What you need to see or what you need to do, you need to wait for price to come and mitigate your supply zone. As soon as price mitigate your supply zone, you need to identify the most recent valid pullback, which is going to be this one. When price takes this valid pullback, you'll have a valid high. The moment you are having this break of structure here, you're going to get a valid high. This valid high is where you can place your stop loss. So you want to take the trade on the retest of the neckline. On the retest of the neckline, you want to take the trade. So the pattern is like this. You have an impulse, correction, impulse, impulse. And then this is an M pattern on the retest of previous support and resistance. This is where you want to get involved, like this. So this will be an M pattern when you are in a downtrend, and then if you are in an uptrend, this will be a W pattern. It's going to work the same. You need a break of the structure on the retest of the neckline. You want to get involved. This is previous resistance and support. So you can do this on any time frame. And then when you're using this as an entry model, that means you're going to be doing this on the lower time frames. So this is an example of a model when you get a valid pullback. How will you react if you do not get a valid pullback? So again, we're going to have a supply zone which needs to be mitigated. So on the mitigation of the supply zone, you need to look for an entry or a pattern. So this will be an example where you mitigate the zone without giving a valid pullback. You're simply going to need to wait for price to create a pattern. So we can see that this is another pattern which has mitigated into a zone. And then we can quickly identify this neckline. On the retest of the neckline, you want to get involved in the trade. So the goal is to identify the patterns so that you can take the trade. You do not use this anywhere on the charts. You can use these patterns when you mitigate into the supply zone. And then when you are in an uptrend, when you mitigate into the demand zone, you look for these patterns. So let's go on the chart and identify where we can utilize this entry model. The first thing which you're gonna need to do, you're gonna need to map structure. So let's go into replay mode and use past data. You're gonna need to be able to map the structure, and then the structure will help you to get the correct trend. So if you're trading with a trend, you're gonna be able to get high probability trades. So let's go back into the replay tool and map some structure. So if you're enjoying this video, kindly hit the like button and comment structure is king, as that helps with the creation of more free educational videos. So we can quickly see that we had a break of structure here. So you have to start by mapping structure. We had this break of structure, and then this break of structure has taken this valid pullback, which becomes our inducement. After taking the inducement, we had this break of structure, which validated this low. And then after validating the low, we're gonna be looking to take the next trade after taking inducement. We can see that we had this valid pullback here. When price took this valid pullback, it gives us a valid high, which is right here. And then it will be a good idea to look for selling opportunities, buying opportunities, meaning to say within this order flow. So you need to identify the valid pullback first, and then this will be a good zone to look for buys. So in this case, you can see that This did not work out. You were supposed to look for a buying opportunity from this zone, but it's not going to work out all the times. But this is the idea after getting that inducement, because you're following the trend. The break of structure to the upside tells you that there are more buyers than sellers. So when you get a break of structure to the downside, this is telling you that now we have more sellers than buyers. Now you can start looking for sellers. This will be our change of character. And then you're going to be looking to take trades from this order block or supply zone. Why? Because this one has imbalance. You can also see that we are having this supply zone, but this is not the highest candle. This is a valid supply zone, but it's not the highest candle. So this is the valid supply zone because it's the highest candle which is unmitigated, and it has taken the high of the previous candle right here. So this is a high probability zone to look for selling opportunities or to look for our model. So we can see that price made an inducement here. When price takes this inducement, it gives us a valid low. This will be a valid low. And then when price breaks structure to the downside, gives us a valid high. So you can notice see that price did not tap into our zone. That means our entry model was not provided. So this is another break of structure to the downside, and we want to follow the structure. So this will be a break of structure, and then we want to take the next trade above the equilibrium. So if you use the Fibonacci tool, mark the swing high and the swing low, you want to take a trade above the 50%. Price has to come and mitigate the 50% and keep on going to the downside. The confirmation will be our patterns. So let's draw fresh supply zones where we can look for the pattern on. So there are many entry models, but you can use this one also. If you wish to watch more videos about the entry models, I made a Patreon where you can join our community. So you can join our Patreon community and access other entry models. So this will be the first supply zone because we can see that it has imbalance. And then above the or below the supply zone, this will be our engineering liquidity. So we want to see price taking liquidity before going to the downside. You can also go down on the lower time frame to refine everything. So if we do go down on the lower time frame, we can see that we can refine this supply zone to this candle. So we're having a micro imbalance there, which needs to be filled. So if price does come to mitigate this, we can look for a trade. You can also refine this one to the order flow like this. And then when price does come to the zone, you can look for your entry model, which is the M's and W's. So we can also identify that this pullback becomes our inducement. When price takes this inducement, we're going to have a valid low. This will be our inducement. And then we can see that we're having this as a valid pullback, which becomes our supply zone again. And then we can also identify this one as our supply zone. So the question is, which supply zone are you going to use to take the trade? You can use this one as the high probability setup. This will be the high probability zone to sell from because above it, there is no unmitigated order block or supply zone. This is a low probability because we have liquidity above. So these two are low probabilities, but they do play out. So because we're dealing with probabilities, you do not know which trade's gonna win and which trade's not gonna win. You simply need to keep on executing your strategy every time you get your rules met. So let's hit the replay tool and see how this plays out. When price takes this inducement, we're gonna have a valid low. So most of the time you're gonna be waiting for price to meet your rules. The moment we have taken the inducement, now we have a valid low, which also becomes our target. And then you want to take the trade once price mitigates the zone. You want to take the trade when price mitigates the zone so that you can go with the trend. So let's wait for price to mitigate the zone. And then you can see that price did not really mitigate the zone, but it gave us the pattern. So you can also use the colors to see the pattern. You can see that we're having impulse, correction, impulse, impulse. The black colors gives us an impulse. The red color gives us a correction. This single candle, it was supposed to be an impulse to break to the upside, but it failed, and then we got another impulse to the downside. Therefore, this will be our neckline. So on the retest of the neckline, you would want to be involved in the trade like this. So this is a low probability because we did not tap into the zone. So this is not part of our rules, but if we did tap into the zone, this was supposed to be the idea. And then how do you get the take profit? You mark this high and this low, and then you're gonna target the minus 0.272. This will be your Fibonacci extension target. So I have made many videos about how to use this as your target. So if you still haven't got the settings of the Fibonacci tool, you can pause the video. So you can pause the video and copy this to your Fibonacci tool, and you'll be able to use the Fibonacci tool the same way I do. So now you have two targets, and then if you get a valid setup, this was supposed to be the trade. So because we did not tap into the zone, we're not gonna take the trade. We want to follow our rules to the tick. So we can see that price gave us another break of structure. When you get a break of structure, you need to adapt to the structure. So we can see that now we are having a valid pullback. This is a valid pullback. After taking the valid pullback, we can take the trade. Take the valid pullback, and we can take the trade. So this now is a high probability trade because it's showing us that there are sellers who are interested in taking the trade. So let's keep on playing. You can see that the moment you take this high, this low becomes validated. So this is an internal structure. You can use a different color to mark the lows, but this becomes a valid low, which becomes your target or your break-even point. If you take this trade from here, this becomes your break-even point. So how are you going to take the trade? You can use a single candle order block. How do you use a single candle order block? You want a candle which has taken the high of the previous candle. We can see that this candle has taken the high of the previous candle. Therefore, this is a high probability single candle order block. If you haven't watched the single candle order block, I made a video. I will leave the link in the description below. So how do you use the single candle order block? Again, on the retest of the supply zone or a single candle order block, you want to be involved in the trade. So you can place the stop loss here, and then usually this should be your target. You get 1:3. However, this becomes too risky because the high of the candles, they get swept and wicked above. So you can use the highest stop loss. This will be your safest stop loss, and you need a minimum risk to reward of 1:3. So this will be the trade. You target the Fibonacci extension. If you target this low, you get your 1:3. If you target our Fibonacci extension, you get 1:4. So this will be a trade which I will take because it falls in line with my rules. We have taken inducement and we have also taken the internal high. So this is a valid setup. And then you just let price to do what it does. And then you can only go break even on this trade when this low gets taken. If that does not happen, you cannot go break even. and then you let price do its thing. And you can see that price hit our stop loss here. So this will be a good stop loss because you have followed the rules. When you hit the stop loss and you didn't follow the rules, that's not good. You need to follow your rules to the tick. So we can see that now we have tapped into our supply zone. So this means these sellers here, as we were liquidity. So we got liquidated, our stop loss was hit, but you can simply look for the next trade, which fits your entry rules. So this is a break of structure, which is also taking the buy side liquidity. So we have taken a stop loss and taken buy side liquidity. So we're gonna wait for another entry. We're gonna wait for our setup. You can see that we are having the setup here. We had an impulse, correction, impulse. So this impulse, correction, impulse, impulse. This impulse failed to create a high. Therefore, this is our pattern. I don't know if you guys can see this, but the colors of the candle, the black colors give you an impulse, the red color gives you a correction. These two black candles were supposed to be an impulsive move to the upside, which failed to happen. The next red color candle, this one, is the next impulse. So on the retest, this is where you want to get involved on the trade. And then you place the stop loss above the high. And then now you're going to need to have a new target, because this target was based on this high. Now we're having a new high. We need to mark this high to this low. And then now we can see that the take profit gets lower. Now our take profit is here. And if you do not know how to use the Fibonacci tool, simply copy the settings and mark the same way I do. You mark this leg from this high to this low to get the target. So there is another way to use the Fibonacci tool. If you mark from this high to this leg, you're gonna get the correction. You mark this high and this low, you get the correction. You can see that we are next to the equilibrium. So after mitigating the equilibrium, you can look for the trade like this. And then this is how you measure the correction. And the other way is how you find the take profit. Okay, so let's proceed. Let's see how this plays out. Where is our target? We're gonna have to mark again. You mark this high and this low, and you get your Fibonacci target. So everything is mechanical, and then this is easy to follow because if your rules are not met, you're not gonna take the trade. So this is our target. You want to exit the trades here. This is where you take your profit. So you can see that this is potential 13R, and then you can simply increase the stop loss. So you don't want to be catching 13R. You need a minimum risk to reward of 1:3. So you can maybe give yourself 1:5 and have safe stop loss. You don't want to have tight stop losses. And let's see how this plays out. And then we can see that we have tapped into the zone. And then this will be another stop loss. So we're having two stop losses, and then we have tapped into this zone. This is another zone where you can look for the entry. Why? Because it meets the entry rules. We want to tap into the zone and look for the trade. So that means you can take a trade from this zone, and also this zone. You do not know which one is going to play out. Therefore, you're going to have to take all of them with the same risk. So if you're risking 1% per trade, that means you're down 2%. So if you're risking less than that, it means you are still having good risk management. So I prefer risking 0.25% per trade. This means we are down 0.5%. It also allows me to take as many trades as I want because there is more room for me to take losses. So the losses are inevitable. You're going to take them. So let's proceed. Let's see the next trade. We want to see price giving us a pattern. At the moment, we don't have a pattern. Let's wait for our pattern. You can see that this is a pattern. We have tapped into the zone. This is that pattern which I gave you. Tap into the zone, This is M. On the retest, you can take a trade. Let's see how this plays out. You can see that we have an M. This is clear to see. On the retest, it's where you're gonna wanna be, and you're gonna be tagged into the trade. So another thing which I like to use the line chart. When you use the line chart, it gives you the accurate turning point of the M. This will be your previous support and resistance. So you can simply place your trade on the retest of the neckline. That will be our entry. Let's go back to the candles. And then you can see that you need a new target, because this target was based on this high. Now we're having a new high. You simply mark this high and this low, and then you can see that the higher price goes, the lower the new target goes. So if price keeps on retracing, that's good for you because you're gonna have a lower target. So this will be our target. So everything is mechanical. You simply need to follow the rules, and then the profits will take care of themselves. So you can place the stop loss above the high like this and get a potential 6R, or you can place the stop loss above this high and get 4R. So either way, this is good for me. I will take this trade, and then let's see how this plays out. You can see that our M button gets tapped in, and then it also looks like a sniper entry. This is where you're gonna go break even on the trade. So that means now you are risk-free on the trade. You're simply gonna let the trade to run. This will be your stop loss. And then after some time, you can see that this did play out. And it's also important to notice how the sniper exit. How did we get the sniper exit? It's the Fibonacci extension tools. So this will be the end of the video, guys. And if you really enjoyed the video, kindly hit the like button. Comment structure is king. If you did watch the whole entire video, comment structure is king. That really helps with the creation of more free content. So we can see that this high gets validated the moment we take this low, which becomes our breakout structure. So if you wish to watch more of these free videos, okay, they're not free on Patreon. So if you wish to watch more exclusive content, you can join our Patreon group and watch more videos and see other entry models. So this is one of my entry models which I like to use, because the market will not be the same all the time. You need to be able to react to what price is doing. You see here, price did not tap into our zone, but we reacted to find a trade which got a stop loss. So this means you lost one trade, two trades, and then you lost two trades and you won one. That means you are 2% up. So this is good results. These are very good results. You are 2% up, and then you keep on looking for the next trade. So this will be the end of the video, guys. If you managed to watch the whole entire video, do comment structure is king, hit the like button, and now we are on 940 or 50 subscribers. That's really good, guys. So if you're new to the channel, do hit the subscribe button, as we are going to reach 1,000 subscribers. So that's very good. And then you will get notified when I upload the next video. So again, I made the video of single candle order block. If you haven't watched it, the video link will be in the description. If you have watched it, you can simply go and watch it again. The more you watch the videos, is the more you program your mind to see these patterns. So it's also a good idea to repeat the videos. The video link will be in the description, single candle order block. And if you want me to teach you privately, one-to-one session, you can join our Patreon and I will help you. So that will be the end of the video, guys. I'll see you.